Hi there, I'm best-selling author of The Power Zero, David McKnight. As you may know, tax rates are set to revert back to what they were in 2017, starting January 1st, 2026. The question becomes, what exactly will your tax brackets look like at that point? And how much more tax will you be paying on the same amount of income? And is there any planning you should be doing in the meantime to protect yourself? Well, the first thing we need to do is establish that there are two things that will be changing in 2026. First, the actual tax rates themselves will be changing. That means that the percentage of tax attached to a given range of income will go higher. How much higher? Exactly as high as it was in 2017. Here's what that looks like. As you can see, today's tax brackets are 10, 12, 22, 24, 32, 35, and 37. Starting in 2026, those tax brackets will change to 10, 15, 25, 28, 33, 35, and 39.6. In other words, just about everyone across every single tax bracket will be paying tax at a higher rate. But remember, the tax rate itself is not the only variable in your overall tax calculation. Another variable is the income parameters associated with each of those tax rates. Now, some people on the internet and elsewhere mistakenly believe that in 2026 we will simply revert back to the same tax rates we had in 2017, with the same income ranges attached to those rates. This is not the case. That would result in a massive tax increase for you and your family, and you would rightfully be up in arms about it. The federal government will instead index the 2017 tax brackets for inflation. That means they'll treat your 2026 tax bracket as if the tax cut had simply never happened. They'll simply apply the inflation we experienced during the intervening 8 years to the brackets we had back in 2017. Again, when I say tax brackets, I'm referring to the range of income that those higher tax rates will apply to. Now, keep in mind that the tax brackets for 2026 have not yet been put out by the IRS, but there is a fairly accurate way of determining what your tax brackets are likely to be and what it will end up costing you, assuming the tax cuts expire as planned. So given that we know that those 2017 tax brackets will be adjusted for inflation, let me show you what happens when we apply historical inflation rates to the tax brackets over that 8-year period of time. By the way, we don't know what inflation will be for 2024 or 2025, so I simply use 3% for both of those years. Okay, let's take a look at what your tax rates are likely to be in 2026 based on a couple who is married and filing jointly. Now, to give you a sense of contrast, let's juxtapose those brackets to the brackets you would see if the Trump tax cuts got extended. As you can see, the lower tax brackets in these two scenarios aren't all that different. The 12 became the 15, the 22 became the 25, and the 24 became the 28. Other than that, the ranges of income for those tax brackets didn't vary all that much. To give you an idea for how much additional tax you might pay, let's look at someone who earned enough income to hit the very top of the 22% bracket if the Trump tax cuts were to get extended versus what they would pay if the tax cuts expired. Based on income of $213,293, you would pay $36,427 of federal tax were the Trump tax cuts to get extended. That's a 17.1% effective tax rate. Were those tax cuts to expire, you would pay $42,578. That's a 19.9% effective tax rate. Again, your effective tax rate does go up, but not astronomically so. And this increase is not so much due to the change in the parameters of the tax brackets as it is the tax rates themselves. So not a lot of tax bracket compression happening for people in these lower income tax brackets. The real bloodbath happens, however, for those in the higher income tax brackets. For example, let's take the income for a couple who went right to the top of the 35% bracket if the Trump tax cuts got extended. That would be $775,300 of income in 2026. Assuming the Trump tax cuts got extended, that couple would pay $173,674 of federal income tax. That's an effective rate of 22.4%, not the end of the world. However, under the new 2026 tax rates, a couple with that same $775,300 of income would pay $236,046 of federal tax. That's an effective tax rate of 30.4%. That's a 36% increase in their tax bill if the Trump tax cuts expired. In short, if you are in the current 24% tax bracket or lower, you will see a slight uptick in your taxes in 2026, but that isn't because of tax bracket compression. It's mainly due to your tax rate going up. However, if you are in the higher income tax brackets, you'll see a massive increase that's due to both a rise in tax rates and tax bracket compression. That's why you see such a bloodbath at those higher rates. So what can you do to protect yourself in the meantime? One huge planning opportunity is to do a Roth conversion. Take advantage of the Trump tax cuts while they're still around so that by the time they expire, you've safely transferred a portion of your retirement savings to Roth IRAs. However, I would not move heaven and earth to get all the converting done before 2026. For example, I wouldn't bump up into the 32% tax bracket between now and 2026 just so you can get your conversion completed by the time the Trump tax cuts expire. After all, even if you stretch your Roth conversions past 2026, the future version of the 24% bracket is only 28%, and that's still lower than 32%. So yes, your tax brackets will be going up in 2026, and yes, it's a great time to do a Roth conversion and take advantage of historically low tax rates, and yes, you should exercise prudence while doing so. But don't rise into an insanely high tax bracket in the short term because you have an irrational fear of the rates in 2026 and beyond. There still will be some tax planning opportunities in play at that point when it comes to Roth conversions. By the way, tax rates will be going up in 2026, but I think they'll be going up even higher in 2030 or 2031 to pay for interest on the national debt and huge funding shortfalls in Social Security, Medicare, and Medicaid. So, if you're planning on doing a Roth conversion, I definitely plan on getting everything done between now and 2031. Hey folks, in the next 10 years, I'm looking to put 100,000 Americans on the road to the 0% tax bracket. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement that shields you from the impact of higher taxes down the road, head on over to davidmcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the Power Zero Network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified Power Zero advisor, head over to powerzero.com and opt into my free video series. And if you have any comments or questions, feel free to drop them into the comment section below. I'll respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.